you can learn how to find real support and resistance levels, you will be able to make so much more money from trading. This is what we're going to learn in today's video. But to get the most out of this support and resistance course, I highly recommend that you watch the chapters in order and that you do not skip through the video, because each chapter will benefit from the previous one. In this video, we will learn what is real support and resistance. And even if you already know what support and resistance is, I really think you will learn something new in that chapter. Chapter 2 is about a big mistake, and this one is a massive profit killer. So if you can walk away from this video and just correct that mistake, that will be a massive win. Chapter 3 is about some secret support and resistance rules, and this is for sure one of the most important chapters of the video. The reason I call it secret rules is because from what I have seen, these rules are not often taught on YouTube and other sources, but they are super important. And last but not least, we will take a look at what I think are the best support and resistance indicators in TradingView. So guys, I hope you are ready. Without further ado, let's jump right into it. So when it comes to support and resistance, you may have heard many different explanations. A common one is that a support level is an area on the chart where the price sees multiple reactions to the upside. And a resistance level is an area on the chart where the price sees multiple reactions to the downside. And this definition is not entirely bad or wrong. However, it can be improved, because later on in this video, you will, for example, learn that we don't need multiple reactions in order to find strong support or resistance. And you will also learn that sometimes multiple reactions from support or resistance can actually be a very bad thing. So a better definition, in my opinion, is that support and resistance is an area on the chart where we see an imbalance between supply and demand. If we have more demand than supply, the price will be pushed up. And if we have more supply than demand, the price will conversely be pushed down. And thinking about support and resistance as an imbalance between supply and demand is something I want you guys to have in mind throughout the rest of this video. So to understand one of the biggest mistakes when it comes to support and resistance, we need to think about what the purpose of support and resistance actually is. And that is simply to make the chart easier to analyze. And if you look at my chart right now, you can see that it's a clear and easy to understand chart. But what I often find is that beginners charts often look something like this. If your chart looks like you are trying to solve quantum mechanics, you are definitely doing something wrong. You need to take a step back and think about the purpose of support and resistance. It's all about making the chart easier to read and easier to understand, not harder to read and understand. So now guys, we're getting to the real exciting part of the video. I will teach you guys some of the most important rules, and I do think and hope that many of these rules will be completely new for you guys and will be super helpful. So let's take a look at the first rule right here. Something you may have heard about support and resistance is that the more reactions we get on a support level, the stronger it becomes. And this is actually true in some situations. But what you need to understand is that depending on how the reactions look like, this can tell us a lot about the price. So for example, let's look at this Bitcoin chart right here. You can see that we have a very significant support level with multiple touches. If you take a look at this touch right here, you can see that we had a very strong reaction towards the upside. This is a good sign that we're talking about a strong support level. And as you can see, later on, the price came down to the support level and we once again saw a strong reaction. But what we already can notice here is that the reactions on the support level are getting weaker and weaker. If we look a bit more to the left here, we can see that we once again got a reaction, but this time it was even weaker. After this reaction, the price started to crawl near the support and then we saw a massive spike down. So the first important rule here is that when we have lower highs, consecutive lower highs into support, this is actually a sign that the support is getting weaker. Let's use what we just recently learned and take a look at this chart right here. As you can see, we saw support coming in one time, the price went up, the price came down, and we saw support coming in once again. We can use this information to draw a valid support line on the chart. But more importantly, what you can see here is that the reactions are getting stronger and stronger. This is an indication that we're talking about a strong support and that the support is more likely to hold for yet another bounce. And as you guys can see, in this case, the price came down to the support once again and got another bounce. The next rule I want to talk about is critical to understand. And if you can master this rule, you can improve your trading by a lot. So I want you all to take a look at this chart right here. As you can see, on this point right here, the price got a strong reaction towards the upside. However, unfortunately for the bulls, the support level did not hold. But if you look a bit to the left here, you can see that the price eventually started to go up towards this previous support level once again. And you can see that this time we got a strong reaction as resistance. If we look even more to the left here, you can see that the price once again came up here to the resistance level at this point, and we got another reaction. Later on, after a small reaction right here, the bulls managed to push the price above the resistance. And the interesting thing is that if we look even more left here, you can see that this previous resistance flipped to become support, right? Looking even more to the left here, we can see that this exact level acted as support once again. So you probably get the point by now. Previous support can flip to become resistance. But in order to find the best levels, I want you to have the rules I talked about earlier in mind. And what you also can do is that you can use indicators to improve your support and resistance levels even further. And that's what we're going to talk about in the next chapter. So now guys, we are finally ready to take a look at some of the best indicators out there to improve your support and resistance levels. So let's just open up the first indicator right away. So what we want to do here is that we go up to the indicators tab in TradingView, and what we want to search for here is pivot points high low. And as you guys can see, we have tons of different TradingView indicators based on pivot points high and low. But in my opinion, one of the best and most straightforward pivot point indicator is the one here at the top that is simply called pivot points high low. So let's open this one up. Now we need to change a few settings. So we go up here to the settings tab for the indicator. The most important setting here is the length left/right. And you can see that we have the pivot high where it says 10 and we have the pivot low where it says 10. And by changing these settings, we can make the pivot points, which are significant points in the market, we can make them more or less significant. So if we increase this number, let's double all the numbers here to 20, you will see that we will get more significant pivot points in the market. So let's do that and press OK. And how can we use this indicator to find the most significant support and resistance levels? Well, if we zoom out a bit here, what you will realize is that many of the best support and resistance areas will contain many of these pivot points. So you can, for example, see that the support level we talked about earlier, which is this gray area right here, contains multiple pivot points. And remember what pivot points are. They are basically significant levels in the market. Let's also zoom in here a bit on this area. You can see that we have yet another key support that flipped to become resistance. And not surprisingly, this area contained multiple pivot points. You can see pivot point as support, pivot point as support. We broke support and we flipped the support to become resistance. If we zoom out a bit here and look back even more, we can actually see that this one was a key support all the way back here as well. Now let's open up our next indicator. So we go up here to the indicators tab in TradingView. And what we want to search for here is quant and then view, so quant view. And you can see that this creator have made so many indicators, so a big shout out to quant view. Thank you very much for your work. But the indicator we want to use here is, let me check here, it should be somewhere here. The indicator we want to use here is called trendline pivot. You can see that this indicator is one of his most popular ones, and that is for a good reason. Now it's important to change a few settings. So we go up here to the settings tab for the indicator, and we want to make sure to be on the inputs tab right here. And you can see that we have a few different settings. You can change the color of the indicator and so on and so on. And the first setting you want to look at is the max number of crossed lines. The standard number here is 4, but if you want more data, you can increase this one. However, what I recommend and what I usually do is that I keep this one as 4, because what we are interested in here is only the recent price action. For the source, you can keep this one at close, and you can keep the max line length here to 252. But as for the pivot length, remember that we changed the settings for our pivot point indicator to a period of 20. So what I'm gonna do here is that I'm gonna match the pivot point indicator with this indicator. So you do want to change the pivot length here to 20. Now we are ready to press OK here. And as you guys can see, what this indicator basically do is that it automatically draws sloping trend lines. And one very interesting thing is that you can see that the pivot points, so you can see we have one pivot point right here, and we have one pivot point right here. What this indicator does is that it draws the trend lines based on the pivot points. And another amazing thing you can see about this indicator is that when we break trend lines, you will get an automatic signal that we see a breakout. You can see this green cross right here means that we broke a significant level. Let's look a bit more to the left here. You can see that we have yet another trend line, for example, right here. Once again, you can see that it's based on the pivot points from the previous indicator, and you can also see here that we get the signal when it breaks out. Another indicator you can use to improve your support and resistance even further is to use volume. So if you have the time today, I highly recommend all of you to watch this video about volume analysis next.